Welcome to the Daily Update. This is being prepared Tuesday, March 8th, where we'll look at what happened today because it goes beyond the stock market, and we'll look to see how things are for Wednesday, March 9th. A very busy day as far as the news cycle is concerned. The big headline news is that the president has decided to boycott Russian imports. But there's a lot under the surface, and this could really cause some problems for the stock market. Maybe not short term. We might get a bit of a bounce out of this. As I just started recording a few minutes ago, the futures were up about 0.75%. So we may be getting some kind of a bounce, but it's still many, many hours before we open for Wednesday's session. So that could always change and things could always happen. So I'll try to go through and keep this somewhat simple and straightforward and objective. And I have to admit, I'm having a little trouble with that right now. But I will do my best as an instructor. That's where I try to shoot, is right in the middle, and then let you decide based on the facts that I feel that I've been uncovering. So where are we at with Ukraine? That's kind of taken a little back seat right now because of the headline news with the boycott of Russian imports, which mainly means oil. And a lot of people are very happy about that right now. And a lot of self-righteousness is going on, saying we're patting ourselves on the back, we're doing the right thing. Well, let's look under the surface a little bit. There's also negotiations going on with Iran and Venezuela. And I was just reading a report that says the go-between, because the US and Iran won't talk to each other directly, so they have to have an intermediary to go back and forth. That person is from Russia. And then coming out of the talks, the Iranian side said, we're getting much more than we could have even hoped for. Well, the quality of oil coming from Iran and Venezuela, which is another place that we're talking to, is not very good. And a lot of this will go back to help Russia anyway, because Venezuela and Russia, they're kind of teaming up together. Iran and Russia are teaming up together. So, hey, is there really a big change going on? We might be able to say, yeah, we're boycotting Russian oil, but are we really? They're just doing some backdoor things, just like Russia is doing with being boycotted from a lot of the banks. They're just going to China and working around this whole situation. So you have to just take it and look under the surface, not just at what is happening, but it appears economically that the decision that has now been made is probably about the worst decision that it could have been for the US economy. The US has more oil than we would ever know what to do with. And it's kind of like, I heard this on a podcast, that you've decided to give up junk food, okay? Whatever it is, Twinkies, popcorn, Coke, whatever it is that you eat for junk food. And so you're removing all of that from your house. But what you don't do is replace it with food. So now instead of having any food, even though it's bad food, now you don't have any food. That's kind of what is happening right here with the US economy. Yeah, we might be getting rid of Russian oil, but we're just replacing one kind of junk food with another kind of junk food when we have a supermarket right down the street with very healthy food that we could go to. But because of the Green New Deal, because of trying to do away with an oil-based economy, they're caving into that pressure. And so while you're at the pump paying $1 or $2 more for your gas and feeling good about that you're sticking it to Putin, Think about that. Are we really sticking it to Putin? No, we're sticking it to ourselves. It's the middle class America that's really going to be getting hurt through all of this. And that will feed over into the economy. That will feed over into inflation. And that will also feed over into the stock market. There was a time when I would pay attention to politics because I've always had an interest in that. And I could keep the two separate because, and I've even said this in my classes that I teach, that there's Wall Street and what they do, and then there's Washington, D.C. and what they do there. Well, the Wall Street sees Washington, D.C. as a little more than theater. And that's the way it was for a long time. You get these crazy politicians running around doing what they do, and Wall Street just kind of laughs at it, and they have support on both sides. They not only support Democratic things, they also support Republican things. So no matter who's in office, they're going to have their influence anyway. But you could keep a more clear separation between the two. It's kind of like what's happened in American culture, where people that I grew up with, I had no idea if they were Republican or Democrat. I didn't even care. But now it's become that dividing line between things. Well, we're starting to see that between Wall Street and Main Street, if you will, or Washington, D.C., where the two are coming very close together. And so we have to pay attention and we have to take what's happening a lot more seriously because it has really big ramifications. Also, what I'm hearing about is even though the US has caused this or declared this boycott, the NATO countries and European countries, they're not going to follow through. Germany may have declined the pipeline, but they're still going to start getting, they'll still keep getting oil from Russia. Other European countries, they're not really behind this. And so now that could weaken NATO. And was that Putin's plan all along? Are things playing out the way he really wants them to play out? That's yet to be seen, but that's one scenario to think about, that NATO is weakened, because this whole thing started because Ukraine supposedly wanted to join NATO and Putin didn't like that, so he moves into Ukraine to try to stop that. Well, now we're seeing some problems even within NATO, and maybe that's what he wanted. So there's still war going on there. There's still attacks. I haven't focused as much on that this time because I'm trying to dig into the economic ramifications of the whole oil embargo scenario. And then bringing these other countries in, Iran, who we are not friends with Iran. And we're willing to just roll over and take it and give them whatever they want. And eventually they want to develop a nuclear weapon. And their purpose is to use that nuclear weapon to ultimately destroy Israel, who is our strongest ally in the Middle East. And we've been supposedly a big supporter of Israel ever since they reformed back in 1948. So it's pretty crazy, and it's probably going to get crazier from here as far as the economic situation. And so that can affect the market. Okay, so let's go back and talk about some of the things that actually happened on Tuesday. And I have some other charts to show you because there's some other craziness that's going on right now. We did have a lower open, which is not very surprising. And that just led right into selling. We just went right down to S1, the initial support level. As the day went on, and as the president finally came out and arrived, because he's habitually late, this gave a little bit of a bounce to the market. Now it's debatable, was that short covering or was that actual buying? And you can make a case for either side, but there was an attempted rebound during the day, and we actually were able to get back above R1. You're used to me saying S1 because we've been going down that support. R1 is resistance. We got back up to R1 and we almost got to R2, but once that was finished, we just shot right back down. and we went back down to the unchanged level, which, because we were higher at that point, acted as a support level. And then there was a little bit more of a rebound later in the day that ultimately failed, and we saw selling going into the close. Because of the roller coaster nature, it didn't damage our technical charts as much as you might think because of the up moves that we saw during the day, but it's still looking pretty negative overall. We ended up being down 0.72%, but like the Russell, it was actually up for the day. The small caps, we were above average. Our technicals are, as far as volume, sorry, I forgot to mention that, above average on volume. The technicals are negative. There are some oversold areas. There are a few pockets of positive things that we can look at, but overall, taken together, we have a decidedly negative environment. Now, because we've seen a couple of down days, we might get some kind of a bounce. Is that going to be a dead cat bounce or some kind of reversal? Because we're still now at the very, very bottom of this range that we've been in. And so we might see a couple of up days to kind of work our way back more into that range. Or we could just fall through the floor from here. The big report coming out on Thursday is going to be CPI, and that's where we get the inflation. Interest rates are gyrating all over the place right now. And of course, the geopolitical concerns that I've already addressed, and I'll talk about a couple more here. What can we take away? The S&P is in correction territory. We're down 12-ish or more percent now, with the technicals being negative. We are showing extreme fear, even though that's negative right now because people are freaked out. From a contrary point of view, that could be positive and lend some support to a bounce of some kind. Prices do remain in the range, but they're possibly breaking down below that range. We still have the whole Russia-Ukraine thing, oil issues that I've kind of addressed, and I'm trying to keep it civil because I got so angry over what was happening. I had to actually get away from my computer for a few hours and just back off and go for a very long walk. And yes, I'm in Belarus, but I don't see any rockets, red glare, at least here yet. But I'm planning my escape route in case that comes to that. And another thing that came out is that, and what helped push up the market a little bit, is that Ukraine has announced that they're not seeking NATO membership, which kind of caused this whole thing. Now, did that really cause this? No, this started 8 years ago. And in 2014, with taking over Eastern Ukraine and getting back Crimea, when Zelensky was saying that, yeah, it'd be kind of nice if we could join NATO, Putin used that as an excuse. But there's also a very, very weak administration in Washington, D.C. right now, and Putin knew he could do whatever he wants. So look into the future to see if similar kinds of things end up happening in China very soon. And I'll just leave it at that for right now. The economic reports that came out on Tuesday really didn't have much of an impact. They weren't big reports. We continue to be overvalued, and we still could drop quite a bit from here before we get to the top end of being overvalued. And I have to cough. The trend, of course, is negative and gaining strength. With each downward movement, we're seeing the ADX pick up in momentum. The bias and momentum, this should not be mixed. I thought I changed this, but no, we are negative. So that is incorrect on the slide. With the downward movement that we've seen, we are negative overall. Okay, let's look at the day's sentiment. We are getting pretty extreme, and we're down in the 13 range now, and that's well below 20. And here's the chart to show you. We could still go lower than this, but there's other times when we've been at this level, and that marked some kind of a bottom. Now, because things are so uncertain, because they're changing, and because we're not really getting clear information about what's happening geopolitically, we might bounce around a little bit. This may not be any kind of a V-shaped bottom necessarily. There's just so much uncertainty right now, but we are showing extreme fear. This is the one that it's making some headlines where nickel prices just shot up. Look at that chart. I got this, I think was it the Wall Street Journal? Or did I go to, anyway, I went to a couple different websites. I wanted to find a chart of this, and the charting software that I use doesn't have that, but they had to halt nickel. And it says here, nickel more than a dime. Gee, you think? Where it had been going along, and then just shot higher. And then I have another chart here. I believe, yeah, this is from Reuters. This is more historical with an open, high, low close. And it's just showing this yellow is nickel. And then we have some other things on here, but I just wanted to see the yellow part and then how it just boom, shot up. And it was such a drastic move because it's heavily used in as a raw material for things that are built. And so it just went to the moon to the point where it was going up so far so fast they had to actually halt it. Then let's see this. Okay, I thought I just went to Google to get this. This also is just another chart of nickel, and we're seeing different prices dancing all over the place. And I could only go back 5 days on this chart. If I clicked on any of these other areas, it said not available. So we're up over 1,000 right now. An 84% return, almost 84.5%. Wow, what do you know? So these are just some things that we watch as part of intermarket analysis because they can bleed through into other things that ultimately affect stock prices. Then another thing that's really been climbing recently is aluminum. And for some reason in the UK, and if you're from the UK, why do you call it aluminium? I just don't understand that. But of course, we say bathroom instead of toilet, but and lift. You guys say lift instead of elevator, but okay. Overall, UK English speakers are much more refined and a lot better than American English speakers, but there are some differences that I don't understand. This just shows how aluminum has been going up. I was able to find the Dow Jones Commodity Index for that on aluminum, and it has not skyrocketed like nickel has, but it's still been really strong. And again, I couldn't go back very far. What I did is I do have this available at stockcharts.com, and this just shows the rise. And this is not necessarily a parabolic rise like oil and nickel and things like that. And it actually declined after it opened on Tuesday. The futures markets trade different times sometimes, but anyway, but it has just been seeing a real rise as well. Just right around the beginning of December, it was at 150, and now we're up almost at about 300. So it's doubled in price. Okay, so let's look more at the S&P now, and we saw a little bit of a decline on a closing basis with the VIX. We are still seeing on the bar chart here a series of higher highs and higher lows overall. So fear overall is increasing, but it's not spike fear at this point, which you can read that a couple of different ways. Is this more orderly and we might see some kind of a bounce out of that? Or do we need some kind of a washout with a real spike in fear to freak everybody out before we get some kind of a bounce? I'm kind of going with the last thing that I said, that we're just seeing a gradual increase in fear and something might happen. And especially if we break below this big low that we set last week and then saw the real nice rebound from that, if we drop below that, there's probably a whole lot of stop loss orders right under this, and they'll get triggered and things could go crazy for a while, and you'll probably see a real spike up in fear at that point. The Vixen is also showing kind of what we're seeing in the daily chart, where we're seeing fear increase both on a closing basis and within the daily bar, even though we closed near the bottom of the bar. The Ulcer Index, as we continue to fall, we see more red bars, so the amount of fear continues to increase. Here's the longer term version of that chart. So our sectors, we had 9 out of the 11 being negative ultimately by the close, with staples, both growth and value took a hit. The only 2 sectors that saw any kind of an advance saw a little bit of an advance from discretionary. Imagine that, which had been just hammered lately anyway. And then the energy sector, which was up over 1.5%. Here's what it looks like since the all-time high. Energy continues to be way in the lead. Just think, if you had got into an energy ETF on January 4th, you'd be up almost 44% right now. Now, nobody is that good to be able to have known what was going to happen. We can look back on the charts and go woulda, coulda, shoulda, but that's never going to lead to consistent success. But this is just showing how massive things have been. And discretionary, even though it was up a little bit on Tuesday, it is still down overall, and the worst performing sector right now. As far as inflation, the BDI actually has been picking up a little bit. It's starting to show more of an inflationary stance after having a real downtrend. What this tries to measure is the cost of transporting dry goods by ship from one place to another place. And they've kind of combined a lot of stocks into one index. And I've been using this for a while now, and sometimes it seems to kind of help us, and other times it really doesn't. So anyway, the CRB, which is probably a little more straightforward, as commodity prices go up, we are seeing inflation ultimately come through to our end. The CRB was up another over 1.5% on Tuesday. And then this also this looks almost the same, but this tries to take out the fluctuations in currencies. This is the comma dollar, and I've been looking at this chart for a long time, but I'm trying to see if it will give us any good information. And then up on the top is the S&P 500. So as this has really been skyrocketing, well, for a while they were both going up, but the CRB is just going parabolic, where we are seeing real declines in the S&P right now. As far as the Fed watch, you can pretty much see that they're figuring 0.25% increase on the 16th. And again, I've mentioned this in other videos, the fact that it dropped a little bit. It was over 5% last time, but now it's a little bit over 4%. But there are some market players out there that think that there's a chance that we're heading towards a recession and that we might not raise interest rates at all. But right now, the market is figuring that there will be an increase. Here's just the historical chart to give you an idea, and it's really hasn't changed all that much the last few days. Our technical alerts, I had so many, I had to scrunch up the screen. So let me try to zoom this in. Let me start at the bottom, where a lot of red. S&P below 4,300, Nasdaq 13.3, 13.2, 13.1, 1,300, 12.9, Dow below 33,000, Nasdaq 12.8. Bearish cross on the weekly chart for a moving average cross on the Dow. That's a long-term death cross. Euro set another 52-week low. The dollar, it declined a little bit, but still has been holding up fairly well. Communication set a 52-week low. The S&P went below 4,200. Utilities, which have been holding up fairly well, they're actually crossing above 70 with the BPI. where tech is crossing below 30. That's negative. Real estate, which had been really struggling the last few weeks, has picked up a little bit. And we're seeing a lot of the value plays really get beaten down now too, where utilities and energy are doing well. And then as the day went on, the Nasdaq tried to bounce back a little bit, 12.9, 13, 13.1. The Dow got back above 33,000. Oil, my gosh, over 120. And with what's happening right now, be prepared for that to go much, much higher. I really want to be wrong in this statement, but everything that's happening right now is just a backdrop for oil prices to increase. In fact, they're up. I looked at that right before the recording, and they're up strong again. Gold has been doing quite well because we're in a real freaky environment. It set a 52-week high and actually crossed back above 2,000. So the breakout so far seems to be happening currently. Intraday, this is what we look like. Not much of a gap at the open. We saw initial selling, which took us right down to S1. We came back up to unchanged, which acted as resistance, came back down to S1. Then some things came out about Ukraine not wanting to join NATO, and this was probably about the time the president was speaking. And again, whether this was short covering or an actual bullish move, you kind of have to say, no, it wasn't, because look at what happened right after. After this finished, we went right back down to the unchanged level, danced around, tried to bounce back up to previous what had been support, which now served as resistance, and then saw late day selling. We didn't close at the low. We set the low earlier in the day, but this is not very encouraging going into the close. So it was a wild ride. Looking at this on the bar chart, we've now continued to break down, but we're still, S1 is right near the low that we set last week. So we want to be watching this level right around 41.27 to maybe 41.25-ish or so. If we start to break below that and head down towards this other support, now then we'll have to start watching that. And if we break below that, things could get pretty ugly. But there's always a chance that something could come in to take us back up into this range. We're now down, oh, I was wrong. We're now down over 13% since hitting the all-time high. Growth saw just a teeny tiny uptick where value had a teeny tiny downtick. Here is the growth versus value index, which just shows growth is having a lot of trouble, where value, even with the little downward movement, it is still in a stronger uptrend right now. Nasdaq 100 actually outperformed the rest of the S&P just a little bit on Tuesday. As far as our trend, yeah, our ADX is getting stronger. We're up around 30, we're over 34 now. We did see a little bit of tapering off with the bouncing around that occurred within the day of the selling pressure, but we're really seeing buying power trail off as well. So we are in a downtrend. The mass index, we're still kind of waiting to see, are we going to drop down? Is that the big event that's going to happen? Or are we going to form, could we get back up here, form a little bit of a head and shoulders bottom? That would take some time to do, and lots of things could happen, but that's possible at this point. So we're just waiting to see what big thing might happen. Our Arun really didn't change. It's showing that selling pressure's fading a bit, but buying pressure is as well. When you combine the two, we are still flat overall and below zero. So that's negative, meaning sellers are in control. No change with the decision point scorecard. Our breadth, it was negative, but not as negative as you might think. Based on price, we saw a decline, and it's a little bit of an uptick based on volume, but really didn't help. We're now dropping below the moving average based on price, and we're seeing a further decline based on volume. The advanced decline ratio is not shooting down, but it is negative. It's headed down and it's below 0. This is one of the bright spots that we can look at. Now we're going to lose this if things don't turn around pretty soon, but we are seeing a bit of an expansion of new highs. Now there were less on Tuesday than we saw on Monday, but the trend is still up for right now. If we really turn and start to break down below this, you're going to see this thing roll over pretty quick. We're now down below the moving average for accumulation and distribution. Short term, these were far away. Wave hello to the 20-period moving average. We're even farther away from the 50. We are seeing a decline based on those stocks above their 20, 50, and 200-day moving averages. And here, we're just not even close to any moving averages. They're all above us right now. MACD, back negative. Short-term oscillator, flat to down, and this one actually turned up slightly with the attempted rebound that we saw during the day. McClellan oscillator, negative and declining. Stochk RSI, negative and declining and getting ready to go back into extreme negative territory if we see follow-through selling. Williams percent are also entering extreme negative territory with more room to fall, potentially. The force index really took a hit with the downward movement. So it is decidedly negative and getting very close to this lower band here. Then I showed this chart yesterday, so I just wanted to come back. This is just a rate of change 1. Well, prices have now caught up a little bit, and this is now more neutral, even though we saw a decline. You would think after such a big move on Monday that we would have seen a bounce, and they tried, but on a closing basis, by the time we got done, it did not provide any support for buyers. And then longer term, the 5-period rate of change is just ticking up slightly from extreme negative territory. Intermediate term, 50 periods, long way away now. And if I'm sounding pessimistic, it's more frustration. I personally, from me, my stance, I go either way. I go long, I go short, I go sideways. I don't really care. It's just the propaganda that we're having to sift through right now is making it very frustrating to make decisions. And that's more what I'm dealing with personally. And that I'm in kind of a dangerous living situation right now with where I'm at. PMO, negative, also based on price and volume, are negative. PMO study showing that we have declining PMOs. We have a decrease in the buy signals, and we are trailing off with those that are even above 0. The BPI, which looked like it could be giving us some support, is now falling down lower. Here's the longer term view, and we could have more room to fall from here. Rainbow, yes, in the rear view mirror. Stochastics, extreme, getting into extreme territory, short term, declining intermediate, declining longer term. Summation index, declining based on price and volume. All of these momentum oscillators are now negative. The vortex shows an increase in selling and a decrease in buying. CCI, which again, I'm just going to keep this chart on here. I don't know. We're back in extreme negative territory on the 14 as well as on the 20-period calculation. RSI is not showing anything extreme yet, but we are negative and declining. The rate of change based on 50 periods, we're back into extreme negative territory. The Sean trend meter, which I'd taken away for a few days because it was up in this area. Well, now we're getting back down into extreme negative territory. Trading systems, the elder is negative, and the SAR continues to be negative with the dots underneath. Yeah. Hold it. This is strange. What's going on here? The dots underneath are positive. When did this thing redraw? Do I have the right day on here? Yeah. Okay. Let me back up. This is the unedited. This is why I call these take one videos. It's still picking up that it likes what it saw in here. So okay, I'm finding that a confusing signal right now. I may have to refresh that chart. Disregard this chart for right now. The Heiken Ashi, negative. Kegi, negative. Renko, negative. 3-line break, negative. Equivolume shows that we could be breaking down, negative. Point and figure, no signals, but looking more negative with these recent circles. Why do I call this stochastics? Fibonacci, those crazy names that we have to learn. We have now dropped below 50%, and now we're going back down into the 61.8% area. Long-term chart. This is weakening here, folks. This red line is starting to roll over, and we are beneath the moving average. Logarithmic, also same thing, just plotted differently. We're below the moving average. Special K, negative and declining on both of these charts. As far as the broad market, you can see we're almost out of this range, but we do have some support that we might hit on the S&P. Mid caps are kind of just back down to the bottom end of the range, where small caps are more bottom to middle part of the range. FANG stocks weren't really down all that much. They were down 0.29%, but still looking more negative overall. Kathy actually had a fairly decent day. ARK was up almost 1%. So whatever she is doing, it lined up with what happened yesterday, but she has a long ways to go before this is going to turn back positive. The Dow, we're looking at a death cross for the Dow. That's a major event. And we still have some more room to go before we get down to S1. Small caps actually holding up a little better. They were up 1/3%, but they're now closer to the bottom end of this range. Same thing with mid caps, bottom part of the range, and we're able to close slightly above S1. Nasdaq getting down to S1, we're able to close above it, but starting to get into scarier territory. Nasdaq 100, kind of the same thing, and we closed right at about S1. Then the Vixen, we're also seeing a series of higher highs and higher lows, which means we're seeing more sustained fear right now. NYSE also starting to look a little more weak, but we do have S1 down below where we're at right now. The S&P 100 outperformed the S&P 500. So we saw a little bit more action in the bigger stocks on Tuesday. Wilshire getting down to some kind of dangerous areas. We still have S1 below us, but we're starting to really break down from this range unless we see some real buying coming into the market, and soon. Internationally, down across the board. Our all stock ETF is also showing a breakdown as well, with the death cross in our recent past. Broad market, dollar declined a little bit, but it has just been on a tear where you've seen both gold and the dollar going up together. Gold had a good day. The dollar declined a bit on Tuesday. And here's our ever-changing weekly chart of the dollar, still showing some pretty good strength. Here's oil, to the moon, fly me there right now. We are, based on this chart, we closed at 123, and this is just, is this going to be a blow off top? It might, because what was announced by the president is going to make people feel better. And so there's likely to be an emotional response to that. Well, those emotional responses die pretty quickly. So we might see a bit of a decline in oil. Here's gold with the continuous contract where we're coming right back up and getting close to the high that we saw during the COVID plunge. Here's what the ETF looks like, where it does show a lot stronger breakout right now. Here's the a longer term view here of the ETF. This is, we're broken above back in 2011 or so. This is when a lot of people got sucked into the market right here. You saw all kinds of commercials on TV. Everybody thought gold, gold, gold. Well, those people that joined the party joined right about here, and then they saw severe pain for a long time. And it's just been within recent times that we actually got back to those levels. Silver also seeing a pretty nice breakout, up 3.16%. Here's a longer term view of that ETF, which shows that we still have a ways to go. If we get up to the 27 area, we're at 24, almost 24 and a half now. That's when it might look more like a breakout for silver. Palladium, which has just been shooting to the moon too, it's going back and retesting a recent high. Copper just kind of is going back down into this little sideways thing here. If the economy was really growing, you would expect copper to really keep climbing. The fact that it's consolidating sideways may suggest some economic weakness in the future. Bitcoin, it's actually above 40 now, but it's been declining up into the high 30s. Bonds, we are still seeing this drop right here with our spread right now. And if this gets down here to the red line, that may be signaling a recession. Fibonacci may be coming back into play as far as interest rates. We're now back. We dropped below the 50%. Well, we're now back up to the 50%. So this is now acting as resistance. Are interest rates going to go higher and break through this, or are we going to see them continue to decline? As far as our across the board yields, the 30 increased, 10, 5, 2, where the 3-month actually declined slightly. Internationally, the German bunds, they're dancing back and forth between negative and positive. But bonds overall, with our world bond index that we have, it was up. No, it was actually down 0.5%. But it continues to be in a decline currently. The corporate bonds also declined, with the current yield being around 3.31%. And here is a longer term view of that yield. Relative studies, gold against the S&P is still breaking out. As long as the S&P goes down and gold goes up, we're going to see this line continue to climb. Energy versus the SPY. Also, energy, not surprising, is really breaking out to the upside, and this moving average is now advancing. Looking at growth against bonds. Okay, this is another interesting way to look at the market. We're seeing growth really decline, and we're seeing the bond 20, these are longer term bonds, they're actually showing a little bit of an advance. That's why we're seeing the growth part of this decline. Then tech versus the SPY. Tech is continuing to show weakness compared to the overall market. And then we have tech versus the 10-year yield. That's one of the things we want to keep an eye on. As interest rates go up, tech is more likely to go down. And so we want to look at the relationship between the two. And currently, tech is declining. Then we're also looking at the 10-year versus tech. This is just the reverse of that. This is showing where interest rates are so far on a relative basis are outperforming tech right now. Then looking at staples versus discretionary, we saw a bit of a bounce with discretionary on Tuesday, but overall, this is a solid downtrend. It's so pronounced, I didn't even put a moving average on here. So what are we going to look for Wednesday? We are in correction territory. The markets do remain in that short-term range, but we're hanging on by a fingernail right now. We're going to need to see some kind of a bounce if we're going to even get back up into the range. We're getting near the end of earnings season, and that's kind of becoming less and less of an issue unless you deal with individual stocks as your company reports. There's still this battle between growth and value. The reports coming out on Wednesday are not necessarily significant. We have the JOLTS coming out, which is about job openings, and then the weekly mortgage application index is coming out. None of those are really big movers. What we're watching geopolitically is, of course, Russia, Ukraine, the things going on in Vienna with Iran. And then I've added Venezuela to this too, because they're kind of coming to the party as well. And this is an ever-changing situation. So where are we at? We are negative and at the bottom of the range. Short and intermediate term are negative, with the long-term trend turning negative the longer we stay below that moving average. So in spite of everything, folks, I hope you have a very good day, and I will talk to you again after Wednesday's session.